Hi traders, welcome to another episode on the trades we missed last week. On our last trade, we were looking for a buy here. So this buy is coming from a fair value gap that was cited here, and you see how price tapped into this fair value gap. So we're expecting a buy at this spot right here for our last trade prior to Monday's opening. So we are expecting a buy here, but price went past this fair value gap due to the opening manipulation that happens between Friday and Sunday. So price rallied down past this fair value gap and went up. You can see how it created another fair value gap here, and this fair value gap price used for a push to the upside. As you can see, this is the fair value gap that was used. Moving on our first trade for Monday, our Monday's opening, we have a fair value gap here. As you can see, this is Monday morning, that is Sunday stroke Monday. So we have a fair value gap here, and have it in mind that we have a bullish trade already here. Price is respecting this order flow to the upside. Now price created a fair value gap, and this fair value gap is going to use as our first confirmation that price would likely tap into this fair value gap and give us our setup, so we can enter from there. So this is our number one trade. You can see this fair value gap, price tapped into this fair value gap here, then gave us what? A break of market structure here, and another fair value gap right here. So here is where we put our stop loss. From the start of this fair value gap that was created to the end is where we put our stop loss. So our stop loss should be here. Let me show you where our stop loss should be. Our stop loss should be here, right below this low that tapped into our fair value gap, and our entry should be at that fair value gap here, the second fair value gap. As you can see, we have a break of market structure here. Market closed above this previous high, indicating that it wants to go bullish. So when price taps this fair value gap, created for us a fair value gap and a break of market structure, we anticipate a tap into this fair value gap here. So that will be our entry. And you can see, let's look for a high for our take profits. So we do not have any high close by for our take profits, and you can see how price rallied to the upside, also gave us a fair value gap here, indicating a re-entry for us. So we have a fair value gap tapped into here, and also a fair value gap, and prior to this fair value gap we have a tap into that first fair value gap, then our break of market structure right here. So you can see this fair value gap is now open for us to wait for an entry. So we have a long position here again. So our entry should be here, and our take profit should be at this low right here that's pierced into this previous fair value gap here. So we have a fair value gap that was tapped into, then we have a break of market structure here, price closed above this previous high, and we have a fair value gap that we anticipate our entry to be, and we can also put it as our 1-to-3 risk to reward ratio, like so. You can see it here. This would have been our take profits for this trade. So the next one we'll be looking at is our number 2. That's our trade number 2. So our trade number 2 will be here. We have on that same Monday a fair value gap here, We have a fair value gap here, but price rallied down past it, creating for us a bearish fair value gap here. So we highlight it from the top to the bottom of that fair value gap, and we highlight it all the way to when price would tap into it again. Now price has tapped into it, and this is on Tuesday. Price tapped into this fair value gap and created a break of market structure and a fair value gap also. So we have a fair value gap here, and we have a break of market structure here. You can see this low right here. This low has been this low is being taken out right here. So this is our break of market structure, and we have a fair value gap. So this fair value gap will be highlighted here like so as our entry from this top here to the end of this fair value gap. This would be our premium entry for a sell trade. So you can see how price rallied past the previous low and comes back up again. So this up here will be our stop loss, and our entry will be here. So this is how we place the trade for a short position here. Our entry here and our stop loss right above this one here. Then our take profit should be at any low, preferably this low right here, because there's a fair value gap here. So we have brought in a risk to reward of 2.5 risk to reward ratio. Or if you want a higher risk to reward ratio because of where our fair value gap is coming from a higher time frame, as you can see we have a huge fair value gap here, then we can extend our take profit to this low right here. This low will be giving us a risk to reward of 4.31, as you can see here. So the next trade is our trade number 3. So our trade number 2 bettered our trade number 3. As you can see, this is a fair value gap here. A fair value gap here. We extend it to the upside of that fair value gap. That is our high that created our fair value gap. Price went down, then comes back up to tap into that fair value gap. The next thing after price taps into that is a break of market structure. As you can see, there's a break of market structure here. Price rallied down, comes back up, tap this fair value gap here, then broke this previous low. That is your break of market structure. The next thing we'll be looking for is price tapping this fair value gap right here as our entry. But because of clarity and a need to enter on a lower time frame to have a bigger risk to reward ratio, then we wait for price to create another fair value gap and break of market structure on a lower time frame like this on our 5 minutes time frame. So we have a break of market structure here. Price rallied past this previous low, and we have a fair value gap here. So we have this fair value gap for us like this. So we extend it to the top to give us our stop loss. So now we have a short position here. So from this we have our entry because price has created for us a fair value gap here and a stop loss high. This high is our stop loss. We don't need to use this high again for our stop loss because we have for us a redefined entry here for a larger risk reward ratio. So you can see price rallied down, then comes back immediately to tap your entry, and you have yourself a risk reward of 2.38 if you are using this high for your take profit. And you can see how price rallied down all the way to this previous high, all the way to this previous low here, giving you a risk reward of 5.6. If you are going to be using this low or this low here, this should have given you a risk to reward of about 6.05 risk reward ratio. So let's move further to the next trade. Now, looking at this next trade, we have a fair value gap here. As price was moving down, price created a reason a reason to look at this supply zone here. This is a supply area here. As price went up, then comes back down, giving you this fair value gap right here. So we highlight this fair value gap and extend it to the right, waiting for price to tap into that same fair value gap and give you a break of market structure, so you have your entry. So this is our number 4 trade. As you can see, this is a recent low. Price broke past this low, or you can use this low for clarity's sake. Price broke past this low. You see price coming down, then goes up to tap into this fair value gap here, and broke past this previous low, then created for us a fair value gap at this area. Now we have a fair value gap you can use. You can use either this one or this one. So let's see how our entry would be like for a short position. Using this fair value gap, you'd have taken your stop loss to this area here, your previous high that tapped into that previous fair value gap. This would have been your stop loss and your entry here, and your take profit would be your previous low. In this case, it might be this low, giving you a risk reward of 1.76. This low would have been your risk reward, or this low here that we were waiting for this trade to reach. This would have been your take profit on this second trade, giving you a risk reward of 4.12 risk to reward ratio. The next trade is our number 5 trade, and this our number 5 trade is coming from a demand area, this along with a breaker and a fair value gap. So we have a breaker here and we have a fair value gap at the front here. So now we extend this rectangle to our right here and wait for price to tap into it. Now price tapped into this on Wednesday. On Wednesday morning, price tapped into this fair value gap, giving you a break of market structure and a fair value gap here. You can see this previous high was broken, and we have a push to the upside, giving you a fair value gap at this spot. Let me take this one out. You can see this fair value gap here. This should be your entry, because price had once tapped into a previous fair value gap here. So this is your entry here, and once you wait for price to tap into this entry, then you are good to go. The price goes in your way. So we have our entry here like this, start of this fair value gap, and this end would be your stop loss. So this trade would have given you a risk reward ratio of 3.45. We have a re-entry here, we have a fair value gap here, so you would have entered here for a second entry. Fair value gap can also indicate a second entry as your trade plays out. So you would have also entered here for a long position, and your stop loss would be this previous low here, because it once tapped into a fair value gap right here. And you have your entry, and your take profit would be the same take profits as the previous trade. So this would give you a risk reward of 7.13. The next trade we have is our trade number 6. So let's move forward to our trade number 6. Okay, we have our trade number 6 here. But before we go to that one, let's bear in mind that this fair value gap here that was tapped into and created for us another fair value gap here. You see how price also respected it here. This fair value gap was respected here, and price also went down, giving you a bearish order flow. So let's go to our number 6 trade. Our trade number 6 taps a previous fair value gap here. There's a fair value gap on a higher time frame that is more defined. If you go to your 30 minutes or 1 hour time frame, you see a big fair value gap here. But as you can see 2 fair value gaps that are actually looking like they are joined together here. So we extend this to the right, and you see how price taps into this fair value gap here. Price tapped into this fair value gap and created for us a break of market structure right here. This is a fair value gap here. As you can see, this is a fair value gap. So we expect price to rally to the downside, tap into this zone and go to the upside. Now we have a break of market structure, as said earlier, indicating that price would want to go to the upside, and this would be our entry for a long position. Our entry will be like this from here. Your stop loss would be at this previous low that created this fair value gap, and your entry would be here. Your take profits would be at this previous fair value gap here. This would be your take profits. As you can see how price taps into this take profits before respecting this fair value gap here. So this was our number 6 trade. Now on to our number 7 trade. While price was moving up, it also created a re-entry, which serves as our trade number 7. We have a fair value gap here. As you can see, this is a fair value gap here. This is a fair value gap here. Extending to the right, we can see a tap into this fair value gap and a bullish move. Then the next thing is to wait for market to tap into a fair value gap as our entry. Now we have a tap into our first fair value gap. Then we have a break of market structure here. The price taps this fair value gap, broke the previous high. Then we wait, and price gives us our entry. And this is our entry for our number 7 trade. This is our entry, and our take profit should be the same as the previous trade's take profit, giving you a risk reward of 3.17. So we have for us our number 7 trade. Now on to the next. We have our number 8 trade just around the corner. We have our number 8 trade. Now our number 8 trade goes like this. From our previous episode, we should search for a fair value gap that price taps into, just like this. Fair value gap price taps into, and wait for a break of market structure. You can see how price taps into this fair value gap. Price taps into this fair value gap here, broke structure, tapped into this fair value gap again, and rallied to the downside. The only difference with this, the only difference is that price respected this breaker and went back up. As you can see, let me use this for example. So we have a short position here. Our stop loss should be here. Our take profit is supposed to be here, but it was stopped by this breaker here. There's a breaker here, as you can see. This is our breaker, and this would have given you a risk reward of 2.07 ratio. But I didn't take this trade because of this whole fair value gap here can be enough to push the trade to the upside. So I wouldn't have taken this bearish trade. So onto this, our number 8 trade. So you know that there was a fair value gap here, price tapped into it, then created a fair value gap here for our entry. So this would have been our entry here at this fair value gap. As you can see, if you can put this fair value gap to this port here, we'd have still gotten our entry here. See our entry at this fair value gap. So price respects this fair value gap so much. So we have a risk to reward of 4.01 risk to reward ratio. So that was our number 8 trade. Now moving forward, let's go to our higher time frame to see how the price looks again. Let's go to our 4-hour time frame. So this is our 4-hour time frame. Now let's take this one away to have a clear view of. So we have our 4-hour time frame like this, and you can see this is a fair value gap here. This is a fair value gap here, coming from this fair value gap here. As you can see, this is a fair value gap. So we extend this like this. Price taps into this fair value gap, rally to the upside. What we'll be expecting on our Monday's trade would be, for me, a bullish trade, because price is coming into this fair value gap here. This is a fair value gap here. Price is coming to, and I would expect something like this to the upside. So this would have been my projection for the new week because of this fair value gap, and this fair value gap tapped into a previous fair value gap. And that is not all. There was also a break of market structure here. This is a break of market structure here. This was a high on a lower time frame, like our 1 hour and our 2-hour time frame. This was a high. So price, after tapping this fair value gap here, it's broke through this previous high and gave us a fair value gap here. So this would have been our entry. So I'll be looking for a trade on our lower time frame as from Monday for a bullish entry. So if otherwise, then I'll look for, and I'll wait. If otherwise, then I would have to wait for a bearish trade following the order flow. So I would wait and keep waiting for a bearish trade if my bias for a bullish trade doesn't play out the way I want it to. So let's look at our charts and any other thing. We can go onto our previous episode to check it out. So let's meet on our next episode on the trades you missed. Peace.